All right, so it's 10:30. Let's shut the doors. Don't let anybody out, because this is going to be the best session you've seen the whole week on project accounting and revenue recognition. So the last technical conference, I did some accounting and what's new and all of that sort of stuff. That was in the R2 release, and it was pretty high level. And we got feedback that we didn't want to go on that high level, we want deep dive. So this is going to be a deep dive, and we'd like to know who those people who asked for that are so we can get them the help they need. So without any further ado, let's get going. So I'm John Burrows. I'm Senior Program Manager in the SI group. I work on the project accounting features, and a little bit about me also. I've been at Microsoft for a little over 15 years, and I've worked in the product groups, and I've worked in IT. In IT, I worked with that other ERP system that's from Germany that sounds like something out of a tree. And also, I have an accounting degree from the UW, and I was a CPA at one time. So I understand a little bit about accounting. It's always interesting, too, to try to explain accounting to computer science majors when I work with them in the product group. So just a question for you guys first before I get started, just to kind of understand where you guys are at. How many of you guys work in the finance area or are accountants? It's about half the room, and then the other half, IT-ish, partners. You guys understand what debits and credits are? It goes on the window side, right? Just when they flip the desk around, then you're in trouble. So, I'm supposed to go through this stuff. So this is pre-release software, so it may or may not look like this when it actually comes out the end of the factory. Also, my obligation to you guys is to end the presentation on time and find my way to my car after I'm done. Other than that, we're not legal. There's a big disclaimer, so read this, write this down, memorize it. Anyway. So let's kind of go through a little theory first before we dive into the product and actually start flipping switches and see how you actually make it recognize revenue. So the theory behind revenue recognition, so revenue, you know what revenue is. So the most basic idea would be when I get cash. So that's cash basis recognition. Unfortunately, it's easy to understand, but for all but the smallest companies, that's not kosher with GAAP and with the SEC and with FASB and with IFRS and all these other alphabet soup regulatory bodies. So there's two tests that you need to take into account when you want to recognize revenue. So the first thing is, and I've got them reversed, is was it earned? Did you do the work? Did you deliver the thing? And the other thing is, are you going to be able to realize it? Is it realizable? So yeah, you did the work, but it's a deadbeat that you did the work for. You're not going to be able to collect on it, so you can't recognize it, or you need to reserve for it. So in a nutshell, that's what revenue recognition is all about. If you want to read more, you can get the FASB concept statement number 5 and read that before you go to bed. Sure to put you to sleep. So FASB is the Financial Accounting Standards Board. It's the U.S. Kind of quasi-government agency that promulgates accounting policy. So that's kind of revenue recognition in general. But when it comes to projects, there's some specific issues, and there's some guidance about, construction contracts are the, somebody's taking pictures. I'm not sure why you would take pictures, but that's okay. So the specific issues that you run into around projects are you've got a long-term event. So you're building a bridge, you're doing some sort of construction project, you're installing some sort of piece of software. So you're taking a long-term event and you're trying to force it into some short-term periods, months, quarters, that sort of thing for financial reporting. So what you run into then is you're going to have to do estimates of how much revenue, how much is realizable. You have to do estimates of costs. What's my cost to complete? That's the biggest estimate, is how much is this thing actually going to cost me? And then track against what I've actually spent on it. And you use the costs and the revenues to then try to calculate a percentage of completion. And we'll look at the different methods that are inside of AX And percentage of completion is really the most complicated one because you've got a lot of different inputs to calculate that percentage of completion, which then leads you to be able to recognize revenue. In some countries, you're not even able to use that method because there's so much uncertainty and there's so much ways you can play around with the numbers to come up with, oh, hey, this quarter looks great. Oh, we really weren't done that much. So sorry, investors. But if you want to look at the American Institute of CPAs has a statement of position paper that has many pages of all the issues that you go through when you want to do revenue recognition, especially for percentage of completion. So enough with the theory. So inside of AX then, we've got basically 4 types of revenue recognition. There's 2 broad categories. Time and materials, which is what it sounds like. So I put some time, hours into the project. I put materials, consume materials, and then I can either recognize the revenue when I invoice it, or I can do this other method, which is we call it with WIP, with work in process, which is where I accrue it before I invoice it. And that's where I look into the idea of it's realizable even though I haven't sent the invoice out or done that step. The other broad method of revenue recognition is a fixed price deal. So I'm going to pay you $100,000 to build me this bridge, and it's up to me to estimate the costs and bring that thing in as a profitable project. There's 2 subcategories then of fixed price revenue recognition, completed contract. I don't book anything onto my P&L. I don't recognize any revenue until I'm 100% complete. And the other is the infamous percentage of completion, where I'm going through some methods to try to figure out how complete am I on this project, and then take my contract value and multiply it by that percentage of completion that I've come up with and recognize that piece of revenue. And that's where you get all these uncertainties involved in terms of I forecast this is what my total cost is going to be, and then I'm at my actual cost and I divide the 2, but how good is my forecast? How realizable is this? Have I delivered this thing? Is this thing really as complete? Some method is also to use an observable method where you go out and say, well, it looks like I'm about 20% done. So how do you back that up to your accountants? And then if we look at like kind of this continuum of product complexity, so the most basic thing in the product, we'll take a look at all 4 of these, and then we'll also do some more deep diving into even more advanced knobs and switches that you can throw on this thing. But the most basic thing is time and materials. It's very easy to set up. Then time and materials with accruals, a little bit more complicated. Fixed price, the 2 fixed price, then we get into this thing called the estimate system. So then there's more setup that needs to be done there. And then when we get into percentage of completion, there's some different methods and different things that we can do there as well. So like I said, we're going to do a deep dive. So we're actually going to get into the product, and we're actually going to flip some switches and see how the thing works. But this is kind of an overview side, and when you go home and take a look at this deck and try to remember what the heck did this guy talk about, these are some of the basic pieces that you'll see. So the project group is really where it drives the project type. Is it a time and materials? Is it a fixed price? And then there's some other switches in there that drive what's broad categories of accounts the thing might be set to, or what sort of calculation method it might use. Then when you get into the ledger posting setup, that's where you actually say, when you do this, post it to this GL account. Then there's also the category system. I don't know if the category system has been talked about or will be talked about during the conference, but so we have this category system that then also does drive the GL posting. So you can say there's broad category groups of like things that are expenses or things that are hour-based, time-based, or item-based. Then within that, you can say there's these subcategories that then you can use that to tell the system, well, if it's an expense and it's related to hotels, post it to this GL account, and if it's this hour category and it's related to project management, post it to this GL account. A lot of it's really used in costs. It's not used as much in revenue recognition, but it does come into play, and we'll take a look at that. With fixed price, there's a couple other things that go into it, a couple other pieces of setup. You'll see this thing called the estimate project, and that always confuses the heck out of people because it really isn't a project. I don't know why they decided to call it that. It's lost in the midst of time. But it's really a bunch of settings on how revenue recognition works. So it drives the calculation through this thing called the cost template. We'll take a look at that, and then how frequently we do this revenue recognition. So we'll take a look at the estimate project. In 6.0 RTM, you used to have to specifically create that estimate project. When you created a fixed price project, we've hid that, so now it automatically happens. But you can actually go in there still and do some tweaking. Right now, the system basically sets 1-to-1, but you could have one giant estimate project and throw all your projects in there if you wanted to, I don't know, if you wanted to just run them all as one batch or something like that. The other thing fixed price needs to use is, in some cases, is a forecast. So especially for percentage of complete method, you need to provide a forecast so it knows this is what the total cost of this project is going to be, and then uses that to then determine the percentage of completion. So like I said, this is kind of, so when you go back and there's no recorded demo or anything like that, you can kind of look at this slide and say, oh yeah, I remember these things. I'll look in setup and here's where they are. But we'll take a look at all of this stuff because again, this is a deep dive. You've been warned. Time to take your medicine. All right, so we'll look at simple T&M first. And we'll hop over to AX. And I hope you guys can read this. So the first thing we talked about was project groups. So the project group is really where we tell it what the project type is, and then there's some other accounting settings that we can flip on here. So if we wanted to do a simple T&M, so what we're going to do is we're going to walk through first creating a simple T&M project. So this project is a T&M project that I simply recognize revenue when I invoice the project. So if I wanted to create the project group for that, all right, this is going to be tricky because it's a, yeah, I know, I got to get, it's, yeah, it's just, I got to get out here to, yes. Why is it not letting me do this? Oh, yeah, okay. On this? Okay. See how that looks. Why did that not do anything? Yeah. Oh. Yep. All right, let's see if that works better. Sorry about that. I think I forgot to make the sacrifice to the demo god this morning. Welcome, other user. Sure.
Quick question for you. You mentioned about how the cost shows up when I invoice it. Okay. We're required to show costs on a project a lot of times when the item's received, not when it's invoiced.
No, actually, we'll take a look at that. The cost, can you guys see that better? Is it still the same crappy? Still the same crap. What's the accessibility thing that you can bump up the resolution? Does anybody remember that? Yeah. What's that? I'm just thinking, I wonder if there's a way I can. It's accessibility. No, not server manager. So, settings. The question was about the costs. So we'll take a look at that. The cost will post when I post the transaction. It's the revenue that will not post until I invoice, or I can control when the revenue posts. Let's see. Yeah. Sorry about this. Yeah. Oh, that's right. This because it's on here. Come on. Yeah, it's not going to let me do that. Yeah, here we go. Thanks. I don't know, no matter. Let's try that first. Oh, you blankety blank. I'm sorry, guys. This is just a fiasco. So what we're going to look at is we're going to set up a simple T&M project someday. And what the project is going to do is when we post transactions onto it on the cost side, you'll see those post immediately. But until we invoice the project, we're not going to see any revenue show up. And it's going to use the default cost and sales prices that have been set up in the configuration. And also we'll show, I'm not going to show the price setup, but we're going to show the project group setup and then the very basic mapping that I need to do to tell it what GL account to go to. Eventually. Tom, do you know where the presentation is going to be? Isn't it going to be part of isn't it part of the website that they register on and stuff? Yeah, after the. Yeah. All right. I'm sorry about this. What a disaster. All right. I'll have to talk really fast then. So I'm going to just do a little tweak here. Yes, we're going to go back in time. Get in your DeLorean. All right. Welcome back to 27th of January. Okay, so let's set up a new project group for this simple T&M. We actually started. We didn't finish. So let's just delete this guy. Yes. I told you delete, you delete. All right. Okay. All right, so the project type really is the big setting here that we need to worry about, which is we're going to select time and materials. I'm just going to flip this. This is the line property. It tells the system whether it's invoiceable or not. You don't need to set this here, each transaction. Stupid thing. Yeah. No, it's thinking. There we go. All right. So we'll just put this. This is just defaulting it. So whenever I do a transaction, it'll default the line property as chargeable. So the other things, one question was, where do we post the costs? Right now, I've got them set all to post to the balance sheet or to the profit and loss statement. So really, it's a little misleading. It tells the system then in ledger properties which of the, you'll see it here in a minute, which of the radio buttons that it needs to worry about. It's not really smart enough to know that on the actual chart of accounts in the general ledger that this is a profit and loss account and this is a balance sheet account. So I can do, if I have no idea what I'm doing, I can go and map a thing that says P&L account to a balance sheet account, but we won't do that. And we don't need to worry about any of this estimate stuff right now. That's for a fixed price project. So this is all we need to do here. The other little piece of setup that we need to do is, I just talked about the ledger posting setup. This is where I actually do tell the system where this stuff needs to go in the GL. And here's where I was talking about, you can use categories to tell it what accounts to go to. These are category groups right now that I'm telling it. With the category group project expense, I want my project expenses to go to this main account. For this revenue recognition, though, for a simple T&M project, the only thing I need to worry about is where does invoice revenue go. So if I add another entry, I'm going to restrict it to my new group. And because there's a bunch of other setup in here, I'm going to add this other category relation setup. We're just going to worry about project hours. It's going to be a simple demo. And then we'll give it the GL account, which is 431-010. So the way this thing works is it reads from right to left. So it's going to go, all right, so you posted something. What's the category? It's a project. And now, is there anything else I need to worry about? Oh, if you posted into this project group, then this is the account that I need to use. So if this was a brand new system, there'd be nothing in this form. Same with the other form, there'd be nothing there. You start from scratch and build all of this sort of stuff. And if there was nothing in here, I wouldn't have to add this category relation. But since this stuff is already set up, the precedence would take over here, and it wouldn't, if I just left it group and all, then it wouldn't work. So just because this system is a system I use for other stuff, I didn't want to delete everything out. No, you just kind of have to pay attention to how the precedence works and test it. So let's go and set up a project and see this thing actually work. So we're going to do a project type time and materials. Use our new project group. We'll create a new contract. Contract is what holds the funding source, which is the customer, basically. And I think in another session, they'll go more into the advanced funding topics. But you can then have multiple funding sources, and you can set limits. Like if I have a T&M with a cap, I can say, I only want to be able to invoice up to $75,000 or whatever, and then I can do some splitting between the two fundings or multiple funding sources and things like that. But we'll just set up a simple contract here with the Retread Tire Company. And we'll create the project. All right, so we've got our project. Another thing is we have states that the projects sit in. Right now, this is in created state. There's a whole form that allows you then to tell the system there's I think 6 or a couple of can states that come, but then you can add more. And then there's a bunch of switches on there that say I can do this and I can't do this and I can do this and I can't do this. Like created only allows you to do a few little things, like you couldn't actually post any transactions on it or anything like that. So we're going to flip this thing to in process already. So we'll be able to do what we need to do to be able to test this thing. So normally, if you're working on a project, you'd expect transactions and things to come in through timesheets and through expense reports and through POs and things like that. We're not going to go through that just in the interest of time. We'll actually use the old school journals. So instead of going through timesheet and going through approval and all that sort of stuff, you'll see that in another session. Right now, we're just going to cut to the chase. We'll post an hour journal. So let's say for this week, our worker worked 40 hours. And if you look at this more information here, you'll see that we've got a cost price of $138 per hour and a sales price of $240 an hour. So 240 times 40 would be what the revenue that I would recognize would be. So if I post this transaction, yay, it posted. I go look at the posted transactions for this project. Okay, so here's my posting. If I go look at the voucher, which is the GL posting, that's an old school accounting word for you, voucher. I've had computer science majors. What's a voucher? It's like this book, So you can see here, I've got 2 postings. And what this is this is to a cost account, cost of project labor, and then we take it out of the way this thing works is you offset it with the payroll expenses, so it's allocating up. So this addresses your question. As soon as I posted that journal, as soon as I posted that timesheet or PO or whatever, it's going to post the cost to the account that you've defined. So you can see here, though, that we haven't done anything with revenue. So if you remember,
So my question was more on the PO. That's okay.
but it's the same sort of thing. So when the vendor invoice comes in, that's when you would post.
Yeah, I was curious about the receipt before the invoice. That's one of the things we run into a lot of times is, I've got a tractor, I'm using it, just because you haven't sent me the invoice.
Yeah, you can actually get it to consume. There's an obscure switch on the project parameters.
And that was the switch. I can talk to you later about
Yeah, so I'm going to be signing autographs in another room after lunch. So if you want to come by. All right, we'll go back to our project. All right, so like we just looked at, we haven't recognized any revenue. So remember, this is a simple T&M. So now if I go and I invoice this thing, so we'll create a proposal. Here's another thing that we've done is that if you're used to the RTM version, is that all invoices, project invoices go through workflow. There's a switch now in project parameters that turns workflow off. So if I now create the proposal, you'll see there's no yellow workflow bar here anymore. And there's a button called Post. And the strange thing says no print. So there it posted. Now if we go back here to our project transaction. Now if I view the voucher, you can see that now we've got a revenue posting. So this is the account that I defined in the ledger posting setup. And so this is in the case of a simple T&M project where, let's say you have to review the invoice with the customer before you can actually recognize the revenue, in that they dispute invoices or something. So the realizable event is I need to review the invoice with the customer, they need to sign it off, and then once I post it, now I can recognize the revenue. So what we saw, this is to recap, so when you're at home later on, you can kind of try to figure out what the heck was that demo about. But these are the settings that really apply to this simple T&M, is that you set up a project type, tell it T&M, define for that project type what ledger you're going to post it to, and then if you need to, you can use categories to subdivide where those things go. So the second type of T&M project is what we call T&M with accruals. And the difference is that, let's say you have a really good customer or something where the realizable event is when that work actually takes place. So instead of waiting until the invoice has been posted to recognize revenue, you can flip a few settings, and this will allow you to do accrued revenue, which for your non-accounting types is, accruals are a way of, if you haven't got the actual invoice or something like that, but you've actually done the work, or the cost has been incurred, but maybe hasn't been billed, you can do an accrual to try to match those expenses and revenues a little bit more. So what this allows you to do is, when I post that journal, it'll post revenue to an accrued revenue account, and it'll put it in. If I didn't show the offset to the revenue posting, but the offset to the revenue posting in this last thing was to the customer account. But since if I'm doing an accrual, and if I haven't actually billed that person, where does the offset go? It goes into a work in process account on the balance sheet, which then we'll take a look at this in the demo also, that when I actually do invoice it, we'll take it out of the accrued, put it in invoice revenue, it'll take it out of that WIB account, and then throw it into the customer balance when the customer actually agrees and owes me for this thing. So let's hop over here. We'll close this guy. We're done with you. So again, it's not much different with a T&M, a simple non-WIP T&M and a T&M with this accrual. The big difference is if you notice these little check boxes here, this turns on the accrual feature. So same sort of thing. Time and materials, I can default the line property or not if I want to. Notice now you can't say go to the balance sheet because when this thing has been enabled, now I have to tell it when I do the accrual what balance sheet account do I do. So there's a little bit more setup involved in then this ledger posting setup. So what I need to do, again, go back to the revenue accounts. So let's define, so just to make it clear, let's define first what the invoice revenue is going to do. So when I actually invoice, this is the invoice revenue account that it's going to go to, and it'll offset with the vendor account. Or with the customer account, and in the customer setup, there's where I define this customer account goes to this GL account. So that's standard AR stuff. The other piece, though, that we need to worry about is we talked about this accrued revenue. So I need to define when I accrue the revenue, what account does this thing go to? So we'll add an entry. This one has less setup, so we just need to add that for our new project type. Accrue into and the other piece is we need to know, okay, so I'm accruing revenue. I've got the credit side. Where does the debit side go? It doesn't go to the customer account. Doesn't go through AR yet. So I need to then tell it, when you accrue, throw it into this work in process account on the balance sheet. So again, since there's setup here already, I need to add it for our group. Again, because this has got set up here, I have to then tell it just for this category for the hour journal, for hours do this, but you wouldn't normally if there was nothing here. All right, and we'll tell it go to this accrual account on the balance sheet. All right. So that is two pieces of setup that you have to do to get this accrual stuff to work. So if we create another project, pick our new project group, click harder. There's our accrual project group. We'll use the same retread tire contract, just out of. All right. All right, and we'll set it to in process. All right, we'll do another hour transaction here. And the difference that you'll see, once I finish clicking all over the place, so we'll do 40 hours. Again, remember, should be about $9,600. We'll post it. Look at the project, posted project transactions for this guy. So now if I look at the voucher, you'll see that there's our accrual for our revenue. So accrued revenue, sales value, or WIP sales value. So as soon as I post this transaction, I'm recognizing revenue. I don't have to go through the invoicing step. It's immediate. And I can control the transaction type. So if I want to do this for hours, but I don't want to do this for expenses, those little check boxes will allow me to define what I want to do there. So, all right, so it's sitting in accrued, and it's sitting in WIP, but we haven't told the customer you need to pay us. So once we go here, if we go to invoice, let's change the date just so it shows up a little better. Post it. All right, we go back to our posted project transactions. You see it's fully invoiced. If we drill into the voucher, now you can see here's our posting on the 27th where we recognized $9,600 of accrued revenue. Now on the 28th when I invoiced this thing, it reversed it out, also reversed it out of the WIP, and now threw it into invoiced revenue and into the customer account. So it goes and kind of cleans up after itself. No, you can't just go into the invoice and say, I want to do 30 hours instead of 40 hours. You'd have to then split the transaction with an adjustment. And then that would be a separate transaction that as I invoiced it, it would do the whole accrual reversal sort of thing. All right. So just as a review, in order to get accruals to work, you need to set up a T&M project group. You need the key thing is to turn on those accrual flags. And then instead of just defining what the invoice revenue account is, you also need to tell it what the accrued revenue account is and what the sales WIP account is. And again, if you want to use categories, you can use categories to move things around in a little bit more kind of refined manner. All right. So T&M is pretty easy to understand. Fixed price in the system is a little bit more complicated. So if you think about a fixed price, you're going to say, you're going to pay me $100,000 and I'm going to do something for you. And in a T&M, we've defined a sales price, and as those hours go on, you do the multiplication, and that's what I recognize. Here, I'm going to recognize the contract value. So the profitability is on me to deliver this thing at the lowest cost that I can do. So inside of AX, the way you define a contract, and then you define the fixed price project, and then there's some parameters that you put on this estimate project that then we have this thing called the estimate system, and that's what you run that does the revenue recognition calculation and the posting. So here's kind of a little diagram we'll walk through before we actually look at a couple of examples of fixed price. So the first thing you do is when you create the project, you define a contract value, and you define this as an on account. You can do it based on milestones, or you can do it as a big lump sum. We'll do lump sum in this just to be quick in a demo. You also, a lot of times, depending on what sort of method you're going to use, is you have to define a forecast. So here is where I do my estimate of costs. So my hour cost, my item cost, my expenses, and this is what, especially if you're using cost to cost, budget to actual for your calculation, this is where you compare, this is what my actual cost is, this is what I forecast. If it was 100 hours to do this job and I'm 50 hours posted, simple, I'm 50% complete. That's what I multiply the contract value for. So you define these things up front in your fixed price project. And then as the work happens, so through timesheets or expense reports, through POs, vendor invoices, through the hour journal and expense journals that we've seen, the actuals come in and they hit the project subledger and they hit project work in process. And then we come into this thing called the estimate project and the estimate system. So there's a this project it's not a project, it's like a bucket full of settings that kind of hang off of this fixed price project that tell the system, so this is the contract, or this is the calculation method that I use. These are the things that go into the calculation. And then when you run this estimate system, you run it like once a month or once a quarter or whatever you've defined, then it goes and it grabs the contract value, it grabs the forecast if that's what it's been told to do, does its calculation, and then it comes up with a recognized revenue amount. And then it will go, if you're saying on a monthly basis, it will go and do this posting for you up until you're 100% complete. The thing not to get confused is you've got this on account thing out here. So let's say for $100,000, I can invoice that thing on the day that the project starts, but that's not recognized revenue. That's a liability now that I am on me to deliver this work. So sometimes people get confused between this thing, but there are two separate things. The on account thing that establishes the contract value plays into what revenue recognition, what happens and what's recognized. But the physical act, unlike in T&M, where I invoice, has no connection with the revenue recognition. It's the revenue recognition engine, the estimate project, that does this, does the revenue recognition. And then we have this other concept called elimination at the end of the project. This is where, like, we'll see it in an example, is if I'm doing completed contract, nothing happens until this elimination happens. And elimination can only happen if the project is 100% invoiced and 100% complete. And then what that does is it moves everything out of work in process and does the revenue recognition. Or if it's a percentage of completion, it trues up the work in process to make sure that has gone to zero and everything's been recognized. So let's go through a demo first of completed contract. That's the easiest one to understand. So what happens on a completed contract is I set up this project and I'm going to deliver something for you, but I don't recognize any of the revenue or I don't recognize any of the costs until it's 100% complete, until we've agreed on it. So what the system is going to do is it's going to accumulate the costs in work in process accounts, and then it's going to, you're going to run the calculation, how complete am I? Once it gets to 100%, then it will say, oh, the elimination button is available for your use. You can click that, and then it will actually do the revenue recognition, clear out all the work in process. So let's take a look. So go back to the area page. Let's set one of these guys up. All right, so now all right, so the first thing is no longer time and materials. Let's do fixed price. Now you notice that when I click fixed price, this stuff down here in estimate becomes required and lights up. So we've got different revenue recognition accounting rules in this defined in the system. What we want to do is we want to do completed contract. We'll talk about this, hopefully we'll have time. We'll talk about the calculation method. We'll leave it at none right now, but there's a couple other methods that you can use that will do some more matching of the revenue to the cost, so you can allocate revenue down to workers or down to dimensions. It's not documented as well as we would like. The matching principle, there's two different kinds. We won't look at that today, but there's sales value and production and profit. So sales value, then I define a category and it says just post that revenue to that category. Production and profit is trying to match the revenue with the costs, and then anything left over is profit. So you define, again, categories for those two things, and what it would do is it would, instead of posting, like if I'm 50% complete of $100,000 project, so 50,000. If I do sales value, it's going to just say 50,000 to the accrued revenue. if I do this production and profit, it's going to split it and say, well, the costs were $22,000, so revenue to those costs is $22,000, or let's say 25, so I can do the math in my head. So it's $25,000, and then the rest of it is profit, so it would post it to another account called profit for the other 25%. But we don't have that set up in here. So we'll say, I've already defined a category for this called sales estimate. And what this does is just says this is the category that I use to post to be able to figure out what journal account or what GL account to use. A couple other interesting things here that we need to define is the cost template and the period code. If you're coming from a 6.0 background, you always had to define this thing on the estimate project that you had to create. And people creating projects would go, what the heck is this thing? What are you talking about? And then they would pick one and it'd probably be the wrong one if they even remembered to create the estimate project in the beginning. So we put these things on the project group, so they default into the estimate project when it's created, when the project is created, when the estimate project is created. So what the cost template does, though, and we'll take a look at that in a minute, is it tells the system what method, how am I going to compute this thing? Is it going to be using budget to actual? What transaction types will go inside of it? So if I wanted to just do it based on pure hours and not worry about any expenses or anything like that, I can say just use hours. If I want to say only use these certain categories of hours or certain categories of expenses, I can define that in this cost template. You can also say that I want to do it based on amounts or I want to do it based on units. So if I want to do, say, a cost template just based on units for hours, I would just say use the transaction type of hours and set it for units. And then when I assign this cost template to these fixed price projects, that's its calculation basis. And we'll take a look at that. And then the period code is pretty easy to understand. It just tells it how often do I run these estimates. Is it once a month, once a quarter, once a year? I don't know why you run once a year, but I suppose you could. All right, so this is what I need to define for a completed contract fixed price project. A little bit more complicated. And then I need to go and define the ledger posting setup. I always have to then map it out to where it's going to go. So again, we use the sales value method. So if you notice here, if we did production and profit, we would have to then define what accounts that would go to, and then what WIP accounts. But since we use sales value, we only have to do accrued revenue sales value. So we'll add an entry for our new project group. Yeah, I clicked it twice. Keep up with me, come on. All right, so I've already defined an account for it. Let's get rid of you. All right, so we defined what side of the P&L this thing goes to. So where does the work in process go? So we need to say WIP sales value. I feel my hair going gray while I'm doing this. Yay. All right, So that's the setup that we need to do. So you need to define the project group, you need to define the ledger postings. We'll go through and let's actually now create a project. Why do things go slower? They don't actually speed up. All right, so this is now, we'll pick a fixed price. Our shiny new project group. All right. Okay, so if you notice there's a revenue recognition fast tab down here. And once it finishes drawing itself here, come on. No, it should show up, but it's just being obstinate. There we go. All right, so it's created an estimate project behind the scenes, just so happens to have the same number. So, and then you see it brought in the cost template and the period code that we defined. And if I went in and actually drilled into this thing, I can actually see the settings behind here. If you wanted to, you could have one estimate project that point to a whole bunch of projects. And you do that here in terms of you drop this thing down and select the one. And again, it shows this is the cost template and the period code, the project group. Once it repaints itself, it would show what projects were in here. But it's being very slow. Yeah, so I can run the estimate from each individual project, and it will do that calculation for that project, or I can go into the estimate project that all those projects roll up under, hit estimate there, and it would run it for the whole thing. There's like a batch, there's batch processing in the periodic piece of the area path, and you can then say, for this estimate project, or however you want to do it, set these batches up and say use this template and things like that, and that's how you would run it more of in kind of a batch mode. If you wanted to, I mean, you can run it for everything. You can just say run it for everything. Don't put any criteria in here, but if you want to do it a little bit more fine-grained, you could do it that way. So we've created our project. Now, need to establish a contract value somehow. Decided to take a dirt nap, didn't you? Yay! Should have known. Let's see. Let's see if we do this. Goes to show you how band-aided together the world is, isn't it? This default setting is 1-to-1. It always automatically in the background creates that project, estimate project behind the project. So
you're going to be doing that, consolidating them into a single estimate project that just has these other projects sitting out there, these estimate projects?
you by hand have to go into each project and say it goes to this project or estimate project. So
Then it had created that other one. So
no, they will then hang around. There's, yeah, you can delete them as long as you haven't done anything with them.
my question is, do you have to delete them?
No, you can let them hang around. I mean, disk space is cheap, right? So I'm sorry about this. This is just ridiculous.
Can the percent complete be just on hours?
Yes. If this ever works, I was going to show you a demo on how to create a cost template that would show just how you would calculate just based on hours, but I don't know if we're going to get to it with this wacky. So we were trying to establish a contract value. So what we need to do is we need to go to the on account. And we'll set up a contract value. This is a very rich project. So here, now if I invoice this thing, wow, it's actually pretty snappy now. Wireless is quicker than wired. Who would have thought? All right, so if we invoice this thing now, remember what we talked about, invoicing in a fixed price project has nothing to do with revenue recognition. So here's my invoice, fully invoiced amount. If I look at the voucher, you can see that it went to a WIP account and to a customer balance. So that $100,000 is sitting on my balance sheet. It's a liability. I owe these guys $100,000 worth of work, or at least $100,000 worth of delivering something. So the next piece that we need to worry about, let's see, I want to get rid of you, is in order to be able to calculate what percent complete I'm at, I need to have a forecast. So we'll go over here. We'll just create a very simple forecast just for hours. So can we do some project management? Actually, I'm going to do 40 this month. And do 40 next month. All right, so I've established a forecast. I did it with hours, but behind the scenes it did the calculation of this is what the cost is for these hours for this category, even for this worker if I would have put a worker in. So it's established this is what my baseline cost to complete is going to be. So
Is there any way to do a forecast for all three transaction types together? Like putting one forecast, that way you're not.
yeah, if you go and use the new WBS stuff, you can put it in there and it will create a consolidated forecast and put them all in. And then there's also, my build is a little bit older. There's a new button on here that says forecast. So you can see the whole forecast and not have to click 3 different buttons and add them together in your head. All right, so we've established a forecast, we've established a contract value, we haven't done any work yet. So let's say in January, let's go do some work. Again, we'll use an hour journal because we don't want to do timesheets, because with this system it would probably take us a day. So we'll post 40 hours. Yes, close, go away. All right, so now it's time to recognize some revenue, maybe. Remember, it's completing a contract, though. We probably won't. But so in order to do the revenue recognition system, we use the revenue recognition, we use the estimate system. And the way that's done is through this estimates button. So if I bring this thing up, so it's going to give me this empty grid. I'll create a new estimate. Again, this is so remember we defined what periodicity, how periodically we're going to do this revenue recognition. So it was monthly, so we'll say we're going to do the first month of revenue recognition. Again, we can use the cost template that defined our cost to complete method and our completion method. So we can say cost template. You can also override it if you wanted to. There's a few other methods in here, but we'll use cost template. We defined the cost template itself. We didn't look at it. We'll look at it in a minute. Is that it defines that I'm going to use amounts and I'm going to use everything. So we'll use cost template. We need to tell it what forecast am I going to pull the budget amount to compare against. All right, and then it's going to go and do its work. So again, remember, we had a forecast of 80 hours. We did 40, so it calculated that I'm 50% complete. But remember, so here's our contract value that we've established, and here's the cost that we've incurred already. Very profitable project. But you notice there's no revenue in any of these two things because we're doing completed contract. So again, I'm not going to recognize any revenue until the contract's done. I do have to post this thing, however, which is just telling the system that you've run revenue recognition, you've done this calculation, these transactions were part of the calculation. All right. So let's hop in our DeLorean and we'll accelerate off into the present day. So let's go So let's say we did some more work in February. All right, so let's say now it's the end of February. I'm going to run my revenue recognition again. System new enough to pick the next month, and we're going to use our cost template again. Use the total model. Remember, we had 80 hours. So now we've got 80 hours of actual work, and we've got 80 hours of forecast, 100% done. But again, hey, look, still hasn't recognized anything. So remember, we talked about that elimination step. So the first thing, this is completed contract, so the first thing I need to do is I need to post this estimate. So now you notice now there's this elimination button that just became active. So now if I click this guy, you will see the revenue move, and it actually recognized the revenue. So what I did is, in order for that elimination button to be active, is I need to calculate that I'm 100% complete, or I could use manual. There's a manual override that you could type in 100% complete and say I'm done. And then also the on account had to be fully invoiced. Once that's done, that elimination button becomes active, and it then will recognize the revenue. And if I go and look, at the ledger posting, you can see there I did my accrued revenue, and then I took it out of that WIP account that I put it in when I invoiced the on account. And also, if you had looked at the transactions, the cost transactions wouldn't have shown up either. They would have gone to WIP. Here you can see they're coming now out of WIP. There's another WIP account that's been defined for the cost side, and now they're going into the P&L project costs.
Why did your cost increase if it went from 40 hours to 50 hours? Looks like that figure is 11,000. That should have doubled.
Yeah, I don't know.
And second question, what if you had put 120 hours as a 40 in January? How does it handle it over?
It would then say you're complete. It will never go over 100. You could never say you're 100 or whatever. Then you would be in kind of this loss situation. I didn't show it. I don't have anything in my demo, but there's a flag in there called foreseeable losses. You flick that on, and then you give it a category, and then it will go and post. I mean, again, you still haven't said you're complete. You haven't done the elimination step, but it will recognize that loss because you might go over. I mean, 120 hours may put you over whatever your contract value is, so it would immediately post that loss called foreseeable losses.
So where does it,
I don't know why this didn't increase.
where does it post that? Where does it get that from? That's
There's in the project group. Now you're back to this again. Oops, I'll do that. Click happy. Down here, this button, foreseeable losses. If I click that button, foreseeable losses, then this accrued loss becomes active, and I need to have a category that then says, when this accrued loss happens, use this category and then throw it into this GL account. And it's interesting, it's an expense category. It's not a estimate category. All right. So we're getting really, really close. So just as a kind of a summary, the project group is what defines your fixed price. You set it for fixed price. You want to look at the journalizing for like where do you put the on accounts. The estimate fast tab, you need to look inside of that. You need to set the revenue recognition methods and the cost template and the period code. You need to define 3 types of ledger postings. So you need to define the invoice revenue, you need to define the accrued revenue, and you need to define the sales WIP. And then there's stupid thing. And then you need to define the special estimate category. You saw that sales estimate that we were using. That when you define that category, you have to check a flag and call it estimate. And then there's that special accrued loss expense category if you flip that flag that you want to recognize losses as they happen. All right, so I had one more thing to go through here, which is the percentage of completion, which is the most complicated one. So luckily we're up against lunch, and if you want to stay, be my guest. If you don't, if you want chicken or whatever they're having, then it won't hurt my feelings if you leave. As soon as my rotten PC comes back to life. So what you're going to see here is percentage of completion, and instead of waiting until the thing is totally done, you'll see that calculation happen again, but it will actually use that sales estimate category then to post into the GL. And the cost template is really more relevant there in terms of where you define how does it calculate, are you using amounts, or are you using units, and then do you include or exclude certain things. while this comes up, oh, there we go. So I'm not going to run through setting this up since we're running out of time. I already have one set up. This is like the cooking show where I can pull the fully baked item out of the oven. You're going to complain, aren't you, until I do that? Stop complaining. All right, so here's the percentage of completion. So what you'll see here is really the difference is that I told it completed percentage. I'm going to use the sales value matching again. It's going to use this sales value category. So let's take a look at the cost template, though. It's really more relevant. So here's a cost template. We're using this one called estimate. So this one says default automatic completion method. I don't know why you'd put manual in there, but you can. Manual is just where there's a box and I can type in that I'm 50% done. Here's where I can say it's based on amounts or units. So right now we're saying amounts. So this thing called mandatory cost lines, when you create one of these things, you have to, these are for all the hour costs, the hour transaction type, you have to have a cost line for this thing. This then drives what categories fit inside of this cost line. And since there are 3 transaction types, it's mandatory that you define 3. You can define more. We can take a look at one that has a bunch more in it. And what this does then is it says, okay, so capture all of these hour costs with all of these categories and throw them in here. So if I look at the detail in the cost lines, again, here's my cost lines. Right now, this one is set up. The percentage of completion calculation includes hour transaction types and expense transaction types, but any item transaction types is excluded from the calculation. And if you look at here again, this is then when I tell it what method do I want to use. Do I want to use budget to actual? There's one called cost to cost where you have to go into this dialog and fill out, this is what I think the costs are versus doing a forecast. This other interesting thing here, and this is really where the power of cost templates shows up, is where you assign the categories that go into these cost lines. So you could say for hour costs, I only want categories of development. Any project management costs, that's not included in my calculation. So you can include and exclude certain categories. So you can get really sophisticated. So if we look at, I don't know if I have one here, but this one, no, that one has a bunch of, this one. There we go. This one has a whole bunch of cost lines, so it's got like 3 of them for hours and 3 for expenses, and only these ones are included in the calculation. And if you look at, say, this one only includes one category. So for application development, we include this one. Project management, for all of these other hours, exclude all of these categories. So these are the ones that are included in the calculation. So does anybody, I'm just curious if anybody uses cost templates. Do you guys do the include, exclude? Because isn't it interesting how you have to include things to exclude them and exclude them to include them? Yeah, I use that when we do the labs to torture people to see if they can figure out how to do it. All right, so we have this project group, and we'll create a project for it. Use our completed percentage. Retread tires. Again, we need to establish a contract value. So you notice my invoice proposal button was inactive. That's because I did not change the project stage. So I can't invoice anything that's in the created modes. I can put on accounts on it because they're not real transactions. So I can establish a contract value, but I can't invoice it yet. So I need to go and I need to flip it to in process. Now it's active. If I go and look at the project transaction, it's going to be the same sort of thing. Here I'm fully invoiced, but I've posted everything to WIP, and everything is in a customer balance. So now if I go back to the project, and now I need to establish a plan. Don't do this to me. I'm the only thing between them and lunch. Oh, come on. So while we're waiting for that, so what you need to do, we saw the setup is, again, fixed price. In your revenue recognition fast tab, the estimate fast tab, you need to set percentage of completion. Set the cost template. The cost template is really, can really control how your calculation works. It's more important than the percentage of completion. If you want to do these fancy things of excluding and including certain things. Again, it's the same sort of ledger posting setup as it is for completed contract because it's really kind of the same thing. And other than, like you would have seen had my demo actually worked, as I'm going through and running the estimate system, instead of waiting all at the very end, I would then post, say when we did that first calculation, it was 50%. I would have seen a posting for $50,000 using that sales estimate category, taking $50,000 out of that WIP account that it went in with the $100,000 on account, taking it out of there and putting it into the P&L. So, and it would continue to do that. And then at the very end, when things are all done, you would then again run that elimination step, but it's not as important in that it doesn't recognize any revenue. It just makes sure that all the WIP accounts are cleaned up. The way I've set this thing up is I use the same WIP account for both, but you can say I want to put, when I do the on account, into one WIP account, and then as I'm recognizing revenue, I want to put it in this other WIP account. And then at the end, when I do the elimination step, it would clear those things out and make sure that they all zero out. But I think that's a little weird. I'd rather see them in one account. So if this thing comes back to life, which it doesn't seem to want to. So
on the cost template, when you exclude like categories and like item types,
mm-hmm.
is that's just excluding them from participating in moving your percent completion goal? Is that what that's doing?
They're not participating in the calculation, so they're not in the denominator or the numerator. So if you say, let's say I've got a posting of application development and PM, so 40 hours of each in my journal, but if my cost template says I only include application development, and I've also done a forecast for those two things, it would only say take the forecast for app dev and compare it against the actual for app dev. Just ignore the PM.
Oh, okay. So that cost still the project.
Yeah, the cost still goes on to the project. It just doesn't participate in the calculation.
Okay.
So it doesn't stop that from happening. It's just how do you want to calculate this thing, and what do you want to use budget, or there's another method where you say cost to cost, and then you have a form in the estimate system that you have to actually type in. This is what the total cost for these cost lines are. You can also then pick. Instead of using a calculation there, we also do a percentage of completion calculation with the new WBS stuff that I think there's another session on later on, either today or tomorrow, that you can say use that percentage and just use, don't go through this estimate system calculation, just whatever that thing calculated, use that as my percentage of complete. So I apologize, this thing is just totally crapped out on me. And it was the best part of the demo too, so you'll just have to trust me. If you're coming for the partner training, I'll actually make you do some stuff with percentage of completion.
When you do the calculation and the posting of it, is there any options to adjust the percentage, and is there an option to adjust the estimated gross profit?
So 2 questions. Can I change the estimated percentage of completion? And the other was change the gross profit. So the first one, I understand your question. Yes, there's this thing, manual. There's a drop down that says manual. Type what you want.
If you have it on automatic, you get a calculated percentage.
Yeah, but you can always, yes, you can always, you can't adjust the automatic. It's always going to say this is what I calculated, but you can go and say, yeah, fine, you calculated that, but you're only 10% done, and type in 10% and recalculate it and post it. The second question was?
Regarding like if you are sitting there and you have a lot of projects, it's really a hassle to go into each project to get the exact adjustment for the estimated profit of a project. Is there a possibility where you can actually change that in where you do the posting?
Estimated. You mean change
Because you'll have
the projected
amount of estimated sales and cost, and then you have a profit margin based on those two.
Yeah. The only way you would do that is you'd have to mess around with the forecast. I mean, there's no, that's where that comes from, is from the forecast. There's no, yeah, but, yeah, there's no, yeah, you calculated that, but I think it's different. We make you go back and do the math on that piece, unfortunately. Any other questions?
You're doing revenue recognition at the invoice level, so you're doing just simple, but then you still kind of want to use the automated, percent of completion with the cost categories, that calculation,
terms of project management to see how close they are, can you still use those tools even though you're not using the accounting aspects of them?
No. Excuse me. No, because it's driven off the project group. You can do something similar with the work breakdown structure. I mean, you can go in there and define all the costs and things like that, and that will then do some calculations of here's what % you're done based on the effort or the cost. But no, you can't say it's time and materials, but I like the estimate system, so I'm going to run that. But no, you can't. It's that drop down that says project type defines everything after that.
What's the difference actually if we use the account profit and loss? Is there any impact on financials? Because
Yeah.
most of the time we use balance sheet on accounts. So sometimes actually we encounter that clients they say, no, I don't want also balance sheet, I want to use profit and loss. So it doesn't impact actually the cycle of
No, it doesn't impact the cycle. It's just what account you put it to. But I always find it strange that you would put on accounts on the P&L. I mean, the idea is they're on. You haven't done anything, so you're liable for this work, but you can't recognize anything. But again, it doesn't impact the functionality of the system. The system works the way it does. It's just a strange accounting practice. It's like, here's the gun. You can shoot targets or you can shoot yourself. But we don't. So like I said, there's a session at 1. It's not a session, but it's like a room, I guess, I'll sit in. And if you have questions, come by. And they can be any project accounting questions. They don't have to just be revenue recognition. They can be indirect costs or whatever. So if you want to get lunch.
So you can do percent complete based on like the quantity of hours?
Yes. Yes, if you noticed in the cost template, yeah, so you do unit-based. You'd want to then exclude items and expenses because it doesn't make any sense to say, oh, you had 10 flights and you did 2 of them. You must be 20% done.